I mean, simply Wall Street, I think, lists that their fair value calculation, there's basically 100% upside. So it's saying that it's 50% undervalued. And then you look at its price to earnings, the company has like a 13 PE. And when you compare it to the semiconductor equipment and materials industry that it's contained within, most of the companies on average have about a 32 PE.
Oh,
so
nice. Wow.
by those measures, it does look undervalued.
Hey guys, welcome back. We're up to episode 19 now. Full roster for you today. Full team is here as well, which is exciting. Little tidbit that we're not going to dig into as a topic, but I don't know if you guys saw Facebook's new open source Llama AI model is apparently just crushing it. If you're playing around on Instagram, you might have seen they ask Meta, Meta AI to make you images. And I had way too much fun with that, creating 3D versions of me and my buddies. AI Pete, have you tried it yet?
No. And, this might be a record of us chatting about AI. I was maybe trying to troll it on a few things just because I saw it come up. But no, tell us more.
I don't know tons. Like I haven't actually, Declan, maybe you can jump in after because you've watched some review videos, but even listening to the All In podcast, they were talking about it. Apparently the latest Llama model, which is open source. If you know what Llama means, large language model, Llama, ha ha ha, my Facebook, you're hilarious. Apparently their light version, they were calling it like the mini Coke can, like the little taster bottle, like their light version apparently outperformed even GPT-4 by a pretty big margin on like less hardware usage and all that. So apparently it's a pretty big deal. Haven't used it myself other than just wasting time creating 3D images. Declan, you watched some stuff. Did you hear any highlights about why it's so good or what's so good about it?
Yeah, so Mark Zuckerberg basically dubbed this as the most intelligent AI there is out there today. When you look at the benchmark tests that a lot of these LLMs measure against, it is right up there with GPT-4, Gemini 2, all the top models right now. And to your point, a big thing that Meta has been a proponent on is the open source of it. Also, this allows, developers to come in, tweak the code, mess around and customize it and make it all their own model virtually for free. And this is where it's pretty fascinating because, when you look back in hindsight at the end of 2022, ChatGPT came out with GPT-3 and it swept the globe. Everybody was absorbed in this technology. They wanted to use it. And it seemed like the company had a pretty good, clear head start on the technology overall. But what I think in hindsight you can look at now is they may have kind of screwed themselves over at OpenAI because they are going up against titans. There's Meta, there's Google, there's even Tesla, or at least Elon Musk, and Grok is being developed. But there's a lot of companies and organizations with a lot more cash than OpenAI, and they are proving out their capabilities with this technology. So, a common thread across all of them is they're ultimately trying to scale as much as they can because that increases the productivity. And that's what you see here with Llama 3. So one of the coolest features that I think everyone is talking about is you can basically generate images in real time as you're typing out your prompt. The image.
Why is Kev smiling?
Yeah, know why.
Yeah. And so, quite fascinating for sure. And I think they have a clear cut lead, so we will see it go down. But there you go. That's the perfect example.
The perfect example.
Yeah. Sorry if you're only listening.
Yeah, if you're only listening, what you were just looking at here is a group of guys in a cabin. One is an astronaut. There is a jaguar and mushrooms growing everywhere. And of course, I made myself the best looking because I'm just greedy and rude like that. And it can go, and I've spent way too much time. I even just did a prompt. I'm like, okay, now what we look like if we're all Asian. Then it gave us all kind of like a samurai vibe, which is pretty cool. Next thing you know, we're like race car driving foxes. And, humanity, the future looks bright. This is what we use AI for. I'm sure this is what they had in mind when they designed it.
That's right. Set in a high standard, right? It's that's pretty awesome how quickly the technology has evolved.
Yeah, it is cool. And it's funny, OpenAI, they did the previous mega funding round, employees and certain insiders are looking to sell stock on the secondary market. I was offered this at a slight discount. I said no for a lot of reasons. I think the biggest thing is that our conversations actually influenced me big time, because we're saying, hey, well, the models are going to be commoditized. The data is what's important.
Yes.
And who's got the best data in the world? Is it OpenAI? Absolutely not. They use everybody else's data. So you're going against Google, Facebook. They've got infinitely better data, more of it. And you're seeing this come out now with new models immediately surpassing OpenAI. So it's just a big sigh of relief that I didn't take down those shares.
I could not agree more, and I'm glad our conversations have helped. It was funny that Declan, when you just mentioned Zuckerberg coming out and saying, "Well, we have the best model," I'm like, that's basically like saying, "Well, we've been stealing the most data from all of you for a very, very long time. That's why we're so much better." Yeah. But yeah, I agree that all these LLMs are going to become free. Like there's so many. I actually started using another one last week. In terms of writing and writing more in a certain specific voice and writing style, because I think in a way, like ChatGPT 3 was actually more customizable for writing style and had less guardrails than 4. So I'm starting to see some limitations, and I started using one called Claude AI, and it is so much better in terms of helping with content and copywriting than ChatGPT is now. Mm-hmm. Yeah, it's actually really, really good. And you think this tool you get for $20 a month, a lot of that, I mean, I don't want us to go down the data train again, but a lot of that is to,
yeah, you do.
I do. So I'm going to say actually a little bit of the future here. And I think you nailed it on some of these bigger companies are really going to happen, because these LLMs now, a lot of them, like an OpenAI, had to put some interesting guardrails in place. People aren't going to want the mass LLM. The next step here is personalization. Who can personalize these better for you than the people that have had your data for a long time, like Meta and like Google? I think it's going to become incredibly far advanced. I think a term that we had discussed before was called RAG, Retrieval Augmented Generation, which is a layer on top of an LLM. I think very soon, whether it's a Google or a Meta, is going to release this personalization approach that Google has years and years and years of my email. I got my first Gmail that I still use today since 2006. It can very quickly have that knowledge base to start writing how Peter does in Peter's personal life. We are a Gmail company for my corporate life. It can write like Peter in my corporate life. Instagram and those group chats that you're in that you never want to leak, I'm sure, can start figuring that out from a meta model. And these different personalizations are really going to offer a lot of productivity increases for a lot of people and a lot more targeted advertising. And I think the way we experience the internet and ads today is going to look very different in 3 years.
Yeah, no kidding. Hey. And the last little point here is, it's based on our last video as well. Not a topic to dig into, but it was really cool to see Fuzzy Panda. They actually commented on our video when we were talking about Globe Life. If you don't remember, it's Big Short. These guys put out a research piece. I think the stock wiped off something to the tune of $5 billion from the market cap. We made a video. We were kind of laughing at their name, and it was just funny to see they actually watched our video. So good for them for finding a niche channel and using that as your research, and good for us for having something worthy to say that these guys would actually pay attention to us. That's pretty cool.
Yeah, thanks so much, guys. And I was unaware they had the YouTube channel. I know we saw the report. The YouTube video is actually a must watch. It was something I wish that I watched before that pod, because it's hilarious, some of the clips they have. And I would run away from that company so fast now if I saw that video, especially when they started introducing some of those sales reps. I actually thought it was a parody. I couldn't believe this was real. Sorry if any of them see this, but the guy who was like, I dropped out of college when I was 19 and now I make $1 million.
Don't say because of Globe Life. Don't say sorry. we hate that guy.
It's like, I literally see TikTok parodies of this. I didn't believe it was real. I didn't believe these were their actual marketing materials. And yeah, if we could revisit that, and any comments we had last week is run away from that company.
Well, if I saw that video before the short came out or before the massive market cap, no doubt I'd be out of here. It's only because it's dropped by $5 billion that it's like, wow.
I couldn't believe it. Yeah. their comment about the guy who did 300K in insurance-based revenue on like the week of Christmas, they're like that's just like literally
Physically
impossible.
impossible.
And then you actually think about it, who in the right mind is doing life insurance during Christmas week? Like, you're not looking at that paperwork. So yeah,
Well, if they
good
make
job,
accounts
guys.
for dead people, then I'm sure a lot of dead people were signing up over the holiday season.
Yeah.
Let's take a massive turn to something totally different. And it's a topic I don't think we've talked about anything even close to this. And to be fair, I didn't even know this industry existed. There's this company called Moolec Science. They've achieved USDA approval for their genetically engineered soybean. It's called Piggy Sooy, Sooy. It accumulates animal meat protein inside of soybeans. Sounds weird, but that's literally exactly what it is. It's a big milestone in biotech for sure, and it should pave the way for commercial availability of their innovative new ingredients. A few key points in case you're unfamiliar. USDA approval, wow, I can't speak. USDA approval indicates that this new crop poses no increased plant pest risk compared to non-engineered soybeans. Sorry, what soybean is not engineered? Anyways, that's another topic. The approval reinforces Moolec's B2B go-to-market strategy for this Piggy Sooy. They aim to provide food manufacturers with a unique and environmentally friendly alternative to traditional proteins. Finally, Moolec's technology has the potential to revolutionize the food industrial biotech landscape, enhance operational efficiency, and transform methods of raw material sourcing, as well as downstream crushing and processing operations. This is a wild company. I've never heard of anything like this. They're physically growing animal meat protein inside of a soybean. That's just one of their angles. So, Pete, what do you see as the main challenges and I guess also opportunities for Moolec to commercialize this food ingredient?
Yeah, I think challenges right now is, as we've investigated in a few of these other companies, is the trend is not their friend. The overall audience of vegans and people who are interested in plant-based and meat alternatives is shrinking. We saw all those early adopters really start shriveling up because people just aren't as interested. If this had launched in 2020 or 2021, they would be getting calls nonstop from me and Small Cap Kev about what we can do with them. Yeah. But that's just not the case. And things have kind of changed. So unless they're looking at rebranding as tech bio or some type of AI play, I think that's going to be the initial challenge. They're around a 60 mil cap.
That 50, I believe.
Yeah, it's tough. It's cool news. But then you go into commercialization, like USDA approval is not as hard as one might think. So I think that is great news, but it's really behind the curtains. That and the FDA aren't the toughest things really to get past sometimes in some of the food space. A lot of actually the complaints are, it's like kind of a self-reporting industry. And a lot of the times if you don't, play nice, other people will actually report you and your competitors.
Really?
And then that's kind of one of the big things, like especially if you're in the like e-commerce space or the advertising space, if you're not putting like the right disclaimers or anything, it's actually usually your competitors that are calling in on you.
I guess that's not so surprising, is it?
Yeah, I mean, I don't know.
Investor relations arena as well.
I think Prime Beverage is going under a huge, social attack right now. I don't know where that started from, but it started from a class action suit. And now the whole social media world is kind of going against them. And they were the fastest growing sport drink. So, I think if you're going for that, that's always gonna be tough. And then there's the logistics and operations. I don't know how many pieces go into the part of producing protein. Now you're thinking soy, you're thinking animal particles, you're thinking scientists. Like, what's the play and the advantage here? And who's that audience, and how do you keep that supply chain running and get this on shelves? That's always going to be a challenge. And I feel that, we have had farming for a very long time as a species and have become very good at getting, whatever type of meat-based proteins on shelves and to people very quickly. This is still emerging. And I think when we saw even some of the competitors in the space, no one has a healthy gross profit. It's a very challenging thing to do, to put, scientists together and then a supply chain, and then put things on shelves at a reasonable price. So you need a pretty good USP as to maybe why people will pay more. And then, as I'm kind of saying, the other thing is the trend's going the opposite way. of people are actually reverting back to things like carnivore diets. So yeah, unless the tinfoil hat people are right and people want, they want us eating insect protein and stuff, I see a lot of challenges in their future for sure.
Well, I'm curious in terms of the technology, and obviously the big constraint here I think is costs for a lot of reasons. It's You're asking yourself, well, as a consumer, why would I pay for something or pay a premium if I can generate the same amount of nutrients and most likely prefer the texture of the meat? But that being said, I think the plants that they are targeting, so whether it's yeast, soybeans, peas, and then this thing called safflower, um, it'd be interesting if they do genetically modify these plants, and then they essentially no longer have to modify them after like the initial generations of the plants themselves, and then they can just like perpetually sustain
Monsanto has entered the chat.
Yeah.
Yeah, just to see
they
like,
modify.
No, that's okay.
Sorry, Declan.
No,
Continue.
But yeah, just to see where that goes, because if that is a like viable alternative, then that doesn't resolve a lot of the issues. It's just a matter of, like you said, Pete, like right now we're not at a point where the economics make sense and consumer preferences haven't supported it. So like they have to do a lot to prove basically that people want to eat their alternatives over the other. And then the other question is, a lot of their pitch was around, well, food insecurity, and the fact that they outlined in a previous presentation that 25.9% of people experience hunger or a lack of regular access to food and nutrients. And so if they're not targeting markets that are, say, more developed like North America, then how are they working with government institutions or like the UN to possibly like help supply these people? And then is that a process that they can translate actual like towards their bottom line where they're making a profit from it all? Is kind of where I'm stuck with it. It's just a matter of can they prove it.
I just have so many questions outstanding. Like, first, is this a vegan product? You know what I mean? Is it because I think they're trying to make meat. So do you eat like a little soybean and it's like pork flavored? Is it chewy? Does it have like fat? Like, or does it taste like a soybean that's just fortified with protein? Like, what is it? Like, are we making beef burger patties, or I guess in this case, some kind of pork, like a bacon product, and selling that to meat eaters that maybe wouldn't necessarily know the difference? I just guess I'm kind of missing like what the end product actually is going to be like. I have really no idea.
Oh, and who it's going to, right? Like, is this something that the three of us would be interested in? No, I think when you're thinking of, let's say, like feeding the masses, like usually that was something that's always been interesting. But overall, in terms of, let's say, world hunger and starvation, it's going down, right? Like we are getting better at producing food at scale. I think, yeah, maybe Declan, you're right. Like as their inputs get cheaper due to technology, maybe there's a certain point where that happens. Maybe you saw that like over the last 100 years with wheat. Wheat has become incredibly cheap and can feed a lot of people. And there, isn't often much of a shortage of it. And a lot of that is they started, really messing with it and creating kind of a different product than what would have been there 100 years ago.
Mm-hmm. Mm-hmm. Like, I'm familiar with cultured meat startups where they're designing meat like it's not supposed to be a vegan product, but you're essentially growing like a chicken breast in a test tube. I mean, that's a wickedly simplified version, but that's the general idea of it. And a lot of some vegans are just saying, I hate the idea of just meat texture at this point. It's kind of too late for me. Then there's vegans I know that are like, yeah, the reason I don't eat meat is because of the animal cruelty angle. This is fine. Mm-hmm. So it has that angle to it. But the thing is, most people look at it and they say, that sounds disgusting. Even though technically it should be bioidentical, it's just the idea of growing meat in a tube is going to take a long time for people to cozy up to. So this is going to have the same problem. I think the developed world is just going to say, no, I'll go buy a steak. I can afford it. Yeah. But like you mentioned, Pete, with feeding the masses, and this soy meat product is ground up and inserted in like to food to fortify it and give it a complete protein, some fat, some whatever, that I see as maybe an angle, but I think it's just going to be a really tough sell. So this would have to be like a long-term vision.
Yeah, but cap's pretty low.
Caps low.
People want in. I think was it an RTO, Kev?
SPAC.
Or a SPAC?
SPAC,
Yeah, it was a SPAC. That's what, if I look at what SPACs look like, a lot of years at the exact same number, huge spike, massive crash. That has SPAC receipts all over
when they did the SPAC deal, they valued this thing at 500 million. It's 50 now. They had 138 million in the trust account for the SPAC, and massive redemptions all the way down to, I think, like 30, maybe even 27, 28 million was the number. So huge amount of the shareholders. If you're not familiar with how the SPAC works, when you got money in there, that's for those watching. If you've got money in there, the deal's announced. If you don't like the deal, you're allowed to redeem it. You get your cash back plus a little bit of interest. This saw massive redemptions. So if that means anything, once it's sold off further. So clearly they've got a lot to prove still. Declan, what do you think? How does Moolec's tech compare to a traditional method of producing animal proteins? What do you think? How do you compare the two?
Yeah, so I'll kind of discuss two things because I think this will provide clarity on some of the questions you were asking as well, Kev. So Moolec outlines in a presentation that there's basically three other alternatives to the alternative of, animal-based meat. And so they outline the plant-based food. So that's just essentially using vegetables and the like to create, burgers, hot dogs, etc., you name it. There's a fermentation process that basically you're taking these living microorganisms and leveraging the high proteins within them to create the supplement basically for your protein intakes. And then the last one is the cultured meat, like you said, where it's basically lab grown meat that is coming directly from living animal cells and then being able to generate in test tubes. So the first and foremost thing there is they basically outline that their products, by inserting these genes within the plants themselves, alleviates a lot of, say, the limitations or weaknesses that exist with these alternatives. So whether that be the taste and texture that a lot of people have difficulties associated, say, with the plant-based things. Similarly, the nutritional values, a lot of the time these alternatives are lacking, but Moolec claims to be able to meet those same standards. And then the last one is scalability and cost. So the big thing here is the scalability and cost. And I think this is where they are really trying to target the animal-based meat proteins. And what they essentially outline is that their process or approach, by building en masse these very large farms that, as anything exists, but then focusing these farms solely on their genetically modified plants, is that it requires about 35 times less land usage than the animals themselves. It requires 8 times less water, and then produces about 60 times less CO2 emissions compared to the animal-based production system. So this is obviously their pitch, their approach. It's a question of, can they truly prove this and demonstrate it? And then ultimately, are the costs justifiable from a marketability and commercial standpoint? Because it's great if you can cut down on all these things, but if people don't want to eat your alternatives, then you're kind of stuck in the same situation overall. So that's where I'll bounce it back to you guys. Do you see a process where this ever surpasses the animal-based system, or is this going to be one thing that they kind of, you can pick and choose what you want to do over the long run?
Oh, wow. Good question. I mean, I think we're throwing a lot of things at the wall right now with these meat beans, let's just call it that. Then there's the cultured meat in the test tubes. Then there's people looking at finding ways to make traditional agriculture a little less energy intensive. And then there's people focusing on vegan. I feel like we're just trying so many different things, even fortifying traditional crops, like Pete was saying, to make them a little bit more resilient, a little bit higher protein. And I think we're just going to have to, people are just going to vote with their wallets, in addition to obviously, USDA and things like that approving it. But who knows? Do I think this could surpass? I have no idea.
Yeah, we're going to need some Gen Z in the comment here. If you're young and watching this, let us know, because this is, for me, something that doesn't appeal to me. But I think maybe to a lot of other people. I mean, I'm still holding two private deals that are kind of, one's a lab grown meat and one's definitely like a large integrated vegan company that's actually doing a lot of revenue. But the upside, I think, of just being a large vertically integrated vegan farming company is you can also use a lot of what you have for vegetables, which people eat without being vegan. This one, I think, is a little bit unique. So at the end of the day, yeah, the end customer is the one deciding a lot of this success.
Mm-hmm.
I mean, Declan, do you think this is going to take over traditional farming or traditional like meat farming?
Yeah, I mean, ultimately, I think if it alleviates a lot of the, say, current issues, whether it's the CO2 emissions, the just general costs of maintaining livestock, I think there is a place for this. And I don't know, this is purely speculative, but like when you look back to, say, the early 19th century, and basically you were assessing, okay, well, cars are coming into the mix, and people are like, well, what the heck's going to happen with horses? Well, the population of horses declined dramatically, and ultimately that they're used, say, more for recreational purposes today. But I could see the same thing happening with things like cows, for example. Ultimately, if you're looking at this from a pro animal standpoint or vegan/vegetarian standpoint, and you want to protect animals, well, that's fantastic. But you also will realize that the population of these primary food lot livestock will likely decline because we don't have much use for them anymore. But I could see it from a cost standpoint. If it tastes the exact same, I can't differentiate it, and it's a lot more efficient to produce, then sure, like, why not? I think that's just overall adding to productivity in the economy. It's just a matter of if they can ever get to that point.
Mm-hmm. Well, something to keep an eye on. I'd say this stock's interesting, but not something I'd look to buy personally, not at the time anyways. However, this next topic and this next stock that you found for us is quite different. Something I would consider. So it's a company called Axcelis Technologies. They're a Wow, I'm having a tough time speaking today. Axcelis Technologies, they're a semiconductor industry supplier. They just won the Texas Instruments 2023 Supplier Excellence Award. And it's not necessarily that's the breaking news. That's just a fantastic little update for a stock that we wanted to talk about anyways. But to give you a little bit of context around that announcement, it's the 5th time in 11 years they've won the award. So that's quite impressive. The award recognizes things like customer collaboration, innovation, commitment to meeting Texas Instruments standards in various areas, including cost, environmental, social responsibility, technology, responsiveness, assurance of supply, and quality. So seems like a prestigious award. Pete, let's start with you. What do you think of the potential growth prospects for Axcelis in the semiconductor market in the coming years?
I think they're in the right place at the right time. I think right now there's a high demand for semiconductors and there's a high demand for domestic made semiconductors. So I think I'd be a little bit more interested in their supply chain. But although it looks like they're down about 50% from its overall peak, it's still kind of sky's the limit. And they have been on quite a run and their financials are all in the right place. Declan, is this something we put in our AI report?
You know what? I can't remember if it's in the AI report, but it's definitely in our edge database.
Because I think when we discussed, when you and I started looking at AI maybe over a year and a half ago about the implications, we said, let's not just look at the open AIs. And because we had a theory that, LLMs are really going to be kind of democratized and there's going to be a lot of, front end solutions built on LLMs that are going to kind of be fakes, but like think of like the crumbs, right? That need to kind of feed this beast. And that was certainly in there. And I think thanks for putting this on our list. This is, one of the things I'd say I'm the most interested in this pod in a long time. And would love to kind of hear your take on it too.
Yeah. I mean, this is a top notch business overall. We'll really dive into it, but I think I was reading a Seeking Alpha report that I helped even provide further confidence of their dominance in this ion implantation market. So they basically have a 37% market share. And, this is a $3 billion market cap company. So relatively small, but it is dominating this space. And the big thing here, when I look at this company, is you want to compare it more, or the way I look at it is very similar to an ASML out of, oh man, what's the country? It's a country in Europe. I can't remember, but it's the second largest European publicly traded company. And then the other one is TSMC out of Taiwan there. And so basically what those two companies do, and similar to Axcelis, is they understood that the semiconductor market is a very complex, capital intensive process. And what they wanted to do is master one area within that. So ASML builds these ultralithography machines. They go for about $100 million per, and they are what the only developer in the world that creates these tools that can then create the top performing semiconductors in the world today. TSMC is one of their biggest customers, and they've mastered the fab process that creates the semiconductor. So basically what that means is that a lot of these companies, whether it's NVIDIA, Apple, you name it, they pretty much reach out to TSMC. They say, hey, we've designed this semiconductor. We want you to go ahead and make it. So those are two examples. Now coming back to Axcelis, basically what they do is with this ion implantation, and when you're asking, well, what the heck is that? Is basically it is generating, basically it's shooting this energy towards the semiconductor that that charges up the atoms and allows them to basically control how the energy gets transmitted and conducted throughout the semiconductor itself. So, it's when you're designing these things, you want the semiconductor to perform these very specific tasks, and they need energy and electricity to do that. And so basically what Axcelis is doing is they're allowing these organizations to basically control the flow of energy. And you got to keep in mind, these semiconductors, like the best ones, the 4 nanometer, the 3 nanometer, they have trillions and trillions of transistors on these small, tiny chips. And so you got to be very, very precise. And basically they've mastered that technology. So it's a very impressive business overall. And they've been doing it for 45 years. So they definitely know what they're doing. And I'm certainly very curious at exploring it further.
Well, it's interesting because, you look at the stock and financials are super healthy. They did over $1 billion in revenue last year. The total addressable market they're going after is not even $3 billion. So they're, probably whatever the math is, 40% of that market currently. So clearly dominating. And like you said, they've been doing this for over 40 years. So excellent long-term track record, growing revenue. Their price to sales ratio, price to earnings, both are quite reasonable. I was wondering though, what holds this company back? You look at the chart and it's, from the bottom left to the top right, like a straight shot up. They never saw any kind of mega pop in 2021, never saw had a drop after that as well. So it's like, why? What's with this thing? Why is it kind of so reasonable? And then you start going through their investor materials and the website, and it's, no offense to the investor relations if you're watching this, I don't mean to be rude. It's really unclear. It's just really not easy to understand. And if you're a retail investor, you just spend 10 minutes and be like, whoa, no, I'm out of here. Ion implantation, I've heard that word 10 times and I still don't know what it means. I had to go on like a deep dive just to understand what these guys do. And when I say deep dive, I mean everywhere other than their website. You should read a slide deck, and by page 3, you should understand perfectly what a company does. Declan, you did a great job explaining it. I mean, just for a little bit more detail, if someone watching wants to learn a bit more, look up semiconductor doping. That's what it's called. Kind of a funny term. And it's basically there's a couple ways of doing it. Ion implantation is one way of basically ramming an atom into these semiconductors to make them conduct electricity better. But that wasn't even in the slide deck. Like it's just a complicated story. But the more you dive into it, it's like the more interesting it becomes. Mm-hmm. Pete, you look like you want to say something.
Oh, no, I just thought Declan's explanation was amazing. And if they're having problems, they could just like clip that. And I mean, I lived with multiple electrical engineers in university, some of which are working at NVIDIA right now. And I think that was a better explanation of semiconductors than I've ever received. So if any of them watch, what's going on, guys? Like, why did Mr. Fundamentals have to do such a good job?
They probably know too much, right? Like they know too much.
Yeah, maybe.
A simple explanation is probably something that's like, might as well be Chinese to us.
Yeah, for sure. So I thought that was great. But like, I think back on the financials, like this is, sometimes we look at stocks and we analyze it. Right now, this just seems like a well-run company that you want to own. Like, why wouldn't you want to be a shareholder of this company? Because, I don't see anything really changing in the trend, and then what future innovation and policy could open up for them.
Mm-hmm.
It's interesting because, like, one reason I think, one way a small company can get a large valuation is going after a gigantic total addressable market. And that's why you hear people pitching, so it could be $1 trillion market, it could be a $300 billion market, this and that. Well, they're saying, hey, we're going after a market that's going to go to $3 billion in a couple of years. Like, it's a pretty small market, and they're already dominating it. So could I see them taking over more of it? I mean, I don't see why not, but I think it kind of puts a cap on their growth, right? Whereas for one thing, I'm actually surprised by $3 billion. That sounds way lighter than I would have thought, but they are looking at using capital to do some M&A, move into different verticals that could allow them to grow. There's opens up obviously opportunities. But then how much do you like management getting into the M&A game? If you're a good buddy Warren Buffett, you wouldn't. So, I don't know.
I like their numbers.
Yeah.
I wish my company's numbers look like this, and we see a much we see much uglier cases worth more. So I think like them being worth 3.2. Yeah, you're right. You have a lot of people that are looking at stock and, blue sky, and maybe some people think they reached that, but this is, a company that is doing 300-400 million a quarter and very profitably. Like, that's something to just want to own in a space that I think, whether it was through M&A or just continue doing well. I mean, the only thing that kind of brought back bad memories was just seeing Texas Instruments. I don't know if Mr. Fundamentals ever had a graphing calculator. Good old TI-83.
I've still got a TI
absolutely
kicking around somewhere. I've got a couple.
Okay. I'm glad they kept that around. Yeah. I think that was important. Did you guys ever jailbreak yours so you could get games on it? No, I guess you guys had you guys. That's cool. Okay, so I didn't have a smartphone in high school, guys. It didn't exist yet.
Neither did I. I had a flip phone.
So you could, so you could jailbreak them. And basically they had like Tetris, they had like these like little like 16-bit kind of games you could actually play on the calculator. So imagine with the semiconductors of today, what those things can do.
Yeah, no kidding. Hey, well, Declan, what do you think? Like, where does a company like Axcelis, how do they outcompete their other semiconductor peers?
Yeah, so frankly, there's a lot of things. So, I mean, to give a kind of top down approach, first and foremost, they really have mastered this technology. Again, with a 37% market share over 45 years, they understand this area well. And, it's interesting because they haven't necessarily expanded beyond it in their own, like, say, seeking out new markets. But what they have benefited from is new markets looking to implement their technology. So they talk a lot about, there's these mature markets, whether it's sensoring, power devices, memory, all these different things. But a big facet that they talk about now is things like electric vehicles, as well as large language models, communication, whether it's 5G, Internet of Things technology. There's a lot of things that they don't necessarily have to go and seek out. There's just ultimately these technologies that are emerging over time that they essentially need to fill a need for, because this technology is necessary. And again, you want to minimize the amount of defects you have on your semiconductors. And this is a tool that helps these businesses do it. And so they just naturally kind of benefit from this overall. But that doesn't necessarily mean that they differentiate themselves from the competitors. Where it is in the technical expertise themselves. So again, with 45 years, they've been innovating this stuff to pretty much deliver the top quality products. And they've primarily focused actually on the top tier or higher value markets in general. And they've developed strong relationships. So whether it's TI, as we've discussed here, they're also, I think Samsung makes up like 10% of their revenue. And there's a bunch of them that essentially are all looking to them to basically use their tools and their technology. And it's all across their Purion family. And they continue to deliver. That's the big thing about, I think, a market like this is when you build those relationships, there's a degree of stickiness because you have a familiarity with the technology, and you're also knowing that you're going to get that consistency of quality. And I think Axcelis has delivered that year over year. And that's, why they've been able to receive Texas Instruments Supplier of the Year for 5 years out of 11. So I think there's a lot of good things, and they're just really well positioned. They're a fundamentally well-run business, and like you guys have talked about, the financials are quite exceptional for a $3 billion company.
Mm-hmm. Mm-hmm. 300 million in approved buyback spending as well, which is nice. Mm-hmm. I just kind of wonder, why do you buy back shares? They've got 75 million in debt. Why don't you just extinguish that? I don't know the interest rate they're paying, so maybe it was locked in. Maybe they got a good rate, and they say, "Hey, we're undervalued, just in the way we see it. Let's buy back shares." But just so you know, obviously, if you're watching, just because a buyback is authorized doesn't mean they're actually going to do it. So it's not like there's guaranteed 300 million of buying coming into the stock. But I mean, they're not going to have a problem being able to allocate that capital. It's not like they're going to run out of money all of a sudden. So either they delever, and that's good for investors, lower interest expense, higher profit margin, or they buy back shares, higher earnings per share. Either way, you got like a nice little tailwind behind you.
Yeah. Well, and just a quick point on that, actually, Kev, is I think when it comes to the buybacks themselves, they may be looking at their business and saying, hey, we are undervalued. So, I mean, simply Wall Street, I think, lists that their fair value calculation, there's basically 100% upside. So it's saying that it's 50% undervalued. And then you look at its price to earnings, the company has like a 13 PE. And when you compare it to the semiconductor equipment and materials industry that it's contained within, most of the companies on average have about a 32 PE.
Oh,
so
nice. Wow.
By those measures, it does look undervalued. And then it's just, if management is being smart and you can buy shares for cheap and it generates a higher ROI than maybe trying to test out different markets and stuff, why the heck not buy shares and increase the ownership stake of those loyal shareholders?
Very interesting.
Yeah. I mean, interesting note on that debt. That's not a ton compared to their revenue. I think depending when they issued that or how it's structured, or if it has anything to do with the value of the stock, or as we know, if some of the executives are personally tied to that stock at a certain point, there's a lot of reasons to get that back up for them. But yeah, I mean, short of us looking at, any people who are added to the management team that are just like Pubco guys that came in as this thing started really ripping, I don't really see a ton of concerns here, and something I'm super interested in.
Yeah. Well, Sorry, just one last point. I do want to push back, or perhaps pose a risk that I think a lot of people should consider, because, Pete, before we got on or started recording, Kevan and I were talking about, basically I just had said that, we see a lot of semiconductor companies that have really strong financials. They seem fundamentally sound. And then you look at it and you're like, okay, well, which one should I choose? There's over 60 companies that are generating revenue growth above 20%. They have operating incomes in the hundreds of millions and billions of dollars, and they're growing every year. And they just look so well positioned that then you ask yourself, well, how do I choose the best company, or how do I make this selection? And that's the thing. The semiconductor industry is a very, very complex process and industry, as you guys have outlined. And it's, when you look at it, you have to be able to differentiate these companies in some capacity or another. So you should just be hesitant, because, there is always the old Warren Buffett adage of understand what you own. And if you don't know why Axcelis can create or pursue ion implantation better than another peer, then you might run into the problem when, say, one of those competitors shows up and starts gobbling market share and you have no idea what the heck's going on. So that's just the big major concern here, is you really got to do your due diligence. But
to Kev's point, if that were true, they wouldn't have a single shareholder, because it's very difficult for people to understand to that point. The other thing you guys know of any semiconductor ETFs? Who's launched those?
Oh, good point. There must be.
Yeah, right?
I actually have no idea, but there must be. I mean, maybe it's bundled into a mega AI ETF.
Yeah.
Declan, you know
mega
some?
AI.
You found some?
Yeah, no, there's certainly that option if you want to invest in ETFs, for sure.
Okay, I'll ask.
Well, so speaking of kind of them transitioning into other avenues for revenue, you think about like an advanced robot that requires semiconductors. Example, like an animated version of an advanced robot, that's Transformers, which is IP owned by Hasbro, which just so happened to report a 24% decline in revenue. And that's our third topic. And how's that for a transition? So thank you. If you're just listening and not watching, Declan was applauding me. Key points for this, had we not included a divestiture of E1, it's a Toronto-based, actually I didn't know it was Toronto, it's a Toronto-based media company. Had no idea. They sold that off to really focus on their core business of toys and games. But excluding the divestiture, revenue would have fallen by 9%, not 24%. There's growth in segments like Wizards of the Coast and digital gaming, up 7%, entertainment up 65%. That offset declines in consumer products, which went down 21%, pretty big drop. Operating profit reached $116.2 million. This includes various costs associated with transformation efforts, while adjusted operating profit stood at $148 million. Shows a significant improvement from the previous year, driven by a favorable business mix, supply chain productivity, and reduced operating costs. So, okay, how's that as a transition from semiconductors to toys? Pete, how do you assess the effectiveness of Hasbro's operational improvements? What kind of challenges do you think they're going to face?
Yeah, I think when you saw the divestiture of E1, it was really them doubling down on a different business model that I think they're going to believe in. And they probably just want to streamline their operations and saw some areas that maybe just wasn't their core competencies anymore. The things I think we're all concerned about is, let's say, why are they fundamentally seeing a drop in maybe physical toy sales or something along those lines? Is that what kids are still gravitating to with the ability to grab an iPad, digital device, or so many other things that are captivating their attention? I think parents today are obviously, trying to do their best to keep kids away from that. But I don't think people in general are gravitating towards, let's say, toys as long. Granted, I think they have an interesting product line ranging from Star Wars to G.I. Joe to Transformers. And then all of those obviously have certain extensions as well. But let's say if we're looking at gaming or movies, which is maybe why, they were in with E1 before, it's not like they're going to go out and build that end to end, right? They're looking at licensing deals for the most part, which can be, fairly lucrative, and building out like a legal team or something along those lines. But that isn't going to kind of compete with the, revenue they've been able to historically get. So I think it will be very important for shareholders to see, operations working well and have kind of a healthy business model, even if sales continue to drop.
Mm-hmm.
Yeah, I look at it, it's an interesting company because, as we all are aware, Hasbro is a legacy brand and it's been around for a long time. And within that, it owns a lot of well-known brands, whether it's Monopoly or Nerf, Furby, My Little Pony, you name it. There's so many toys that, especially for me, I knew like every time I was watching television, there was probably a Hasbro ad going on. And so it's a brand that I'm well associated with in that extent. But it's just a matter of, I don't know if they can, I think they're doing the right thing by sticking with their kind of legacy model and leveraging these strong brands that they have. But I just don't know if they have the growth avenue to really compete in this next era where digital gaming and most activities are through an online setting, where now you're competing with a fury of different gaming developers and organizations. And there's just not as much of a stake on the market that you could have when things and toys in particular were kind of the main source of entertainment for children.
I mean, which sucks when you think about it too. Like going for, like, I have such good memories of being with buddies and playing with toys, and like you're looking at people and you're part of this like world, and you're not just sucked in to a screen. You see some of these like little kids, like even like just tiny kids holding iPads and stuff, just inches away from the screen and just locked in. I'm like, that's got to be horrible for so many reasons. But then it's funny, I was just at my nephew's birthday on the weekend, and the guy was just Toy Central. It's like Batman, Superman, like every action figure you can imagine. So I was like, okay, well, clearly like this kid got the jackpot.
Yeah.
Hopefully that's not the exception, you know?
I think it's to an age, right? Like it's like I think, you know, I just don't think they're keeping toys as long as they used to. And there's certain, you know, I'm sure Hasbro has that toys for certain ages. It's even recommended on the box for a lot of them. But now I think there's this
toy,
next
I believe,
generation,
right?
Well, I mean, yeah, there's definitely also the whole collectible market as well.
Sure.
But the thing is about, then you're moving to digitization. I have a niece who's 9 turning 10. I have a nephew who's turning 10. They're both already asking for phones because, you know, kids in their class have them. So that's like grade 4 and 5. And then it's like, as you know, these lose some of their presence and you're not even seeing the commercials that make you want to buy these things. It's tougher to get kids to even know they exist because maybe they're not watching TV or they're not being targeted by ads. How do you kind of keep that customer lifetime value? Or do you ever care about a G.I. Joe video game if you've never owned a G.I. Joe? I mean, I was stoked when that Transformer movie came out because I had, you know, Optimus Prime when I was a kid. And, you know, okay, they put Megan Fox in it. Cool. But I was going to go see that. Right? And the first, you know, and like, I think I don't know how many, eventually they started getting kind of bad. I never watched Mark Wahlberg was in one of them. I never saw that one.
Oh, he was? I had no idea. I stopped.
I think I don't, someone might need to fact check that. I think maybe I'm making that up, but I know I did eventually stop watching them. So it's just like, you know, if you're not building the loyalty now, what does the future of those digital gaming or movies even look like? Because you're just not going to be as excited.
Well, maybe they should steal a chapter out of Lego's book, because I think, you know, as you look at this business, they were kind of on a decline and similar struggles in terms of, you know, children not adopting the toys and everything as often as they did in the past. But Lego really did a rebrand, focusing and trying to target older audiences, which I think served them well, because they ultimately, you know, it no longer was about these like small gimmicky toys, but you could build like maybe a massive Titanic or the Eiffel Tower and these various things. So I think by catering to those audience, you know, across the three of us who all had a strong relationship with like the toys, the physical toys that we did growing up, if there's a way that, you know, obviously we're not all going to go out and start playing with Nerf guns per se, but you could be able to like create environments
pretty fun.
where adults, well, it does sound damn fun, you know, but it's
I love Nerf guns.
So maybe to see marketing.
I think it's maybe it's our fault. We're on our phones too much, guys. We need to get back out there and play some Nerf guns.
I do think things like that, though, to be honest. I was public speaking at an event a couple months ago, and it was a really funny format where the audience gets Nerf guns and gets to shoot you while you speak. And they shoot you when they like what you're saying. So I'm like giving a speech, and I think it was on like LinkedIn. I was on LinkedIn marketing. I'm getting like shot in the head with a Nerf gun and stuff. And it was a little hectic, but I mean, it did bring back good memories, and it is fun to play, you know, that never gets old.
Yeah. So I don't know where they pivot. Like, where do they pivot? Are we going to have, like, as kids get into influencers, I guess? Or what are they going to be? You're going to make action figures of influencers? Like, that isn't something we want. If, you know, if my nephew had brought around a Jake Paul action figure, I'd really not be pumped about that. Yeah, I don't know. It's, it's tough. So it's like, where does Hasbro go? Like, what's the M&A? I mean, $9 billion now, revenue not going the right way. Maybe they're doing what they can to tighten up. I was surprised a little bit by the E1 move. They are just down the street from me.
I had no idea that was like Toronto. Crazy.
Yeah, they're a beautiful office, actually. It looks great, right at like Peter and Adelaide. But yeah, I think, you know, like where do they go from here? We could all still see, I think, valuation going down as sales are.
It's a weird, it's strange financial statements too, because like you look, they've actually got epic gross margins, over 60, like almost 70% gross margins. So it's from the top, like you might as well be like almost a software company at that point, but then they chew through it at like lightning speed. So, you know, and one of the biggest, like, so it net out to a 1.5 billion operating loss, but impairment of goodwill was 1.2 billion of that. So every time we look at companies, that's one of the first things in assets. Like, what are the real assets? Like cash, receivables, maybe inventory. But then you always see goodwill. And if the goodwill number is too big, you're kind of like, well, how real of an asset is that? Goodwill can't pay down your credit card bills, right? So we're always nervous about that. And then when you see something like this, where it's a $1.2 billion write down in goodwill, it just shows how easily this stuff value can change. And then all of a sudden you're taking a giant.
Yeah. But if we had that conversation, I think around 2007, when Transformers movie came out, and we said, what is that Transformers brand worth?
A gazillion.
Yeah, right. So I think this is one of those cases where, like the Monopoly brand, like what is that worth? Like it's a lot. Like I don't think Monopoly's ever going to go anywhere, but I definitely think they have a challenge advertising now. Like you said, like it was pretty easy probably when we were watching, what were we exposed to? Saturday morning cartoons, and you would see a new toy drop and you're like, whoa, and you'd ask your parents for it. So now it's just like, it's easy for kids to get toys all the time. They can ask their parents on Amazon, and, predominantly I think as like inflation, I don't think it hit the toy market per se as much. Toys are still pretty cheap, so kids can have more of them, probably don't become as attached to them. But it's like, how do you find a 4 or 5 year old audience now, and their family might not even have cable? They could let their kid watch, Peppa Pig on YouTube, and then there's different guidelines. If a child's watching YouTube, part of YouTube guidelines will even ask us if we're uploading this video, if it's meant for kids, right? That will change the advertising guidelines and what will pop up in front of a 5-year-old's eye if they're watching their iPad. So I think a lot of those things have probably created a very big challenge. And I don't know how they address that to get, a very young audience interested in something. And then, like we said, maybe at 10, they're already disinterested in the whole market.
Totally. I don't envy toy companies nowadays, because it's like, what, do you have to make a transformer that's like gender neutral? You know what I mean? Like, and has certain pronouns. Like, no matter what you do, someone's going to be furious at you. And I just feel like, oh boy, I don't envy them being in that position. We're going to see a green-haired Optimus Prime that identifies as a they, them.
I got to double check their site if it's still G.I. Joe. Maybe it got rebranded.
G.I. person?
They own Magic, though. That has
Magic the Gathering.
That has quite a following, doesn't it?
Is that still a bit? That was huge when I was younger. I'm assuming that's.
Well, you can ask my business partner because he still plays on weekends. So.
No way.
Oh yeah.
Okay, so it's.
Wow. He's a Dungeons and Dragons and Magic guy for sure.
Well, they own Dungeons and Dragons too, so maybe he's going all.
Oh, do they really?
Yeah, they do.
Well, he's got to
get him in here.
Yeah. Why do we buy this? Why is no one else in on this?
Yeah right.
But yeah, it's tough go. We'll see. But I would say my short-term outlook isn't necessarily great, and long-term would depend on explain to me how you kind of reach this new audience.
Mm-hmm. And how do you pay down $3.5 billion in debt with a negative operating income?
Yeah.
You can't sell everything. Like when they sold off E1, they were able to pay down $400 million in debt, which is great, but that's still just a pretty small piece of it.
Yeah. Well, and it's interesting, like from that financial standpoint, because you look in years back, I think they have been like both free cash flow positive and net profitable every single year aside from last year. So there is a level of like performance that's just over that time, the revenue has barely even budged, and it has declined, say, even especially in this past year. And so I think they need to, it's a question you can say, I think they need to do something, but I don't know if they have the means or the technology or the brands to really turn it around. It's just, they can squeeze it out. And I don't think Hasbro is going anywhere, or the brands themselves. It's just, can they do anything to grow? I don't know.
It's pretty tough. Like I thought, Mattel would have seen I think a bigger bump with Barbie last year. Didn't really happen. I think it came out right before last summer. It's kind of sitting around the same spot it was. So I don't know how excited people are about this. and just even the shopping methods of, let's say, the Amazon. I'm sure Amazon's a massive channel for them. Is that as healthy as it used to be? It would be interesting to see how they actually do account for that, because their gross margin, Kev, like, wouldn't be affected by an Amazon channel, but like you said, eating through in the middle, there would definitely be a lot of different associated costs with Amazon as a seller, and their other traditional retailers.
To the live shopping channels, I don't know if you've seen those. It's pretty cool. Like on Amazon, is it just called Amazon Live? They'll get an influencer on there going through their wardrobe, and you're selling things in real time. And what was that company? Amazon? I would say Vizio, the TVs.
Yeah,
Amazon,
Vizio.
right?
No, Walmart.
Walmart. So that's it. Okay,
Yeah.
so then I see where this competition is going to be heating up. So I mean, do you have like these child influencers and you're slanging toys through the TV? I don't know. Maybe.
You know what? That could just be looking at distribution channels for them. If they could figure out a unique partnership with Walmart, that, let's say, Vizio's in a lot of households and it's a smart TV, but it could have, let's say, YouTube or other channels on it. That could be an interesting way for them to, increase some targeting in the household. So that could be a strategy.
Hire us.
Yeah,
we'll set up. Figure it out.
We're marketers and analysts on this pod.
Exactly. Well, boys, I mean, we hit an hour. I feel pretty good about this. That was, I think we kind of squeezed everything we could out of this episode. We said AI enough times that I can check that box. That's good. Hopefully it'll help us out in the algorithm, Fuzzy Panda, come back, talk to us if you want to. That could be fun. Who knows? We'll be watching your short closely, and let's see. So, I mean, that's it. That concludes episode 19. You got Mr. Fundamentals, Trend Tracker, and Small Cap Kev. We'll see you guys next time.